Well, after a day or so of waiting, AJ has completed his analysis of Tesla's earnings coming up in probably the third week of July. And I did not bring out uh, I'm not going to give you screenshots here. I'm just going to give you the basics. So his final analysis is that the earnings per share will be 53 cents before a one-time restructuring charge for that massive layoff that took place in the second quarter. And so 53 cents is the before adjusted, before restructuring, and then 45 cents would be the amount after the restructuring. He also said that inventory days dropped back to something much closer to normal, but still at 24. So there's still an opportunity maybe to see some additional positive cash flow coming out in the third quarter as a result of even closer inventories, but maybe the inventories will start to run at 20 days or so from now on. And then cash flow returns to a positive $500,000 on top of some extremely high spending on CapEx. All right, so there you go. There is the final numbers from AJ. Let me know what you think in the comments below. Do you think this will move the markets? Is this going to be a good or a bad thing? Do you think people will pay attention to AJ? He's actually a very sophisticated player. And so will Wall Street be looking at AJ's numbers compared to, say, some of the other numbers that are not from quite as sophisticated players? All right. Listen, I got a news story for you today. You may have heard me say, if you watch the channel a lot, I have not driven my FSD on the Model Y now for at least a year, I'm going to say. And prior to that, I really didn't do much with the FSD. I would commonly use the Level 2, on long trips. But the nag thing just drove me nuts. It just nagged me to the point where I didn't want to use it. Well, anyway, today I finally decided, my wife actually convinced me I should drive it to church. It's about 20 miles, 25 miles each way. Three freeway changes, I think 3 freeway changes, off ramps, a little bit of city driving, and see what I thought. Because though she's been driving it a ton, the reality is I'm not in the car with her because she's driving it to work or to various shopping trips or, the kinds of things that she needs to do. And I'm not with her on those trips. So I haven't been in a car using FSD, like I said, for about a year. So I'm kind of almost like virginal in that regard today. So what did I think? Well, first of all, we had zero interruptions in the ride the entire way to church. Once we got there and we got into the parking lot, it's a huge parking lot. There's a very, very large campus. And as we're driving around, there's lots and lots of places to park. It couldn't decide where to park. I wasn't sure whether we're currently able to choose a parking lot yet. There was no, if that's available, we didn't find it. Anyway, it drove around for a while, passing parking spot after parking spot, and finally we disconnected and went ahead and parked it. On the way home, we did have a couple of unusual situations. One where one where there was a tire that what do you call it? A cap, probably off of a tractor, big 18-wheeler. A tire was all of a sudden, a car in front of us passed this piece of rubber in the middle of the road. The car did not have really time to make a decision to go around it, so it went straight over it. We discussed for a while whether, if I had been really paying a lot of attention, might I have tried to avoid it rather than go over it? My guess is no. Anyway, so that was kind of unusual. Then it chose to get off at an off-ramp in a situation where I didn't think that it needed to do that. Fortunately, it was one of those off-ramps where you guys right back on the freeway, got right back on the freeway. Anyway, it was all in all, pretty much a normal drive without too many problems. In general, I would say it's a lot better than it was a year ago. All right, so that's just a quick update. Listen, this entire case with, the Chancellery Court in Delaware against with Elon Musk and with this plaintiff, it's now making headlines everywhere. It's a huge point of discussion. The Delaware legislature has taken up bills that are trying to get in the way of these activist judges. There's, I guess, 5, if I remember, it might be 7 judges on the Chancellery Court, and 2 of them are activists, and they're noted activists, and they're being called out as activists. And now the legislature has passed a bill, doesn't know if the governor will sign it, but the legislature has passed a bill that would dig into part of this activism. I did comment on this yesterday. You can go back and take a look. It doesn't sound to me like this was a very good way to deal with the previous issue that had been created by this judge. But in the meantime, there's an awful lot of activity going on. This judge is going to be under pressure, but maybe she doesn't care. She's an activist. Some people think she's paid off. Some people think that there's shenanigans going on that are deeper than we know, but maybe she's just an activist, and maybe she thinks that's fantastic and what she needs to do in life. Well, as this case continues to make headlines, Warren Redlich went deeper after our discussion on, that would have been yesterday morning. And Warren said that he went deeper, and he found a place where it clearly says, Judge McCormick has clearly said in the previous decision, in the previous report that she put out, that the judgment was not final. Okay, so that erases, at least based on his reading, that erases that part of it, which means that Tesla would be able to ask her to revisit the judgment because it was not final. So there would not have to be any special procedures in this situation. She could apparently, based on his understanding, she should be able to just go ahead and reconsider. And that's what Tesla's asking to be done. They're saying, let's not even get to the amount of the legal fees yet, because what we really need to do is reconsider the judgment based on what's happened now in the Texas meeting where the shareholders reinstituted or voted again. All right, so from Tesla Larry, he had this to say: whether McCormick is right or wrong, whether the law is good or bad, has nothing to do with the issue of this previous case that their local legislature is now working on. He's saying that this is a bad bill that has been put forward because the separation of power principle enshrined in our Constitution and critical for the functioning of our democracy prescribes a separation of the powers of the judiciary from the legislative or executive branches of government. But now what McCormick has done, she apparently has gone out and she has taken a position on the bill. And he says the action of McCormick involving herself actively in the political process is akin to a senior judge of the DC appeals court writing to the Senate, advocating on a bill being debated in the Senate. Can you imagine the outcry? Impeachment of that judge would almost certainly follow, and rightfully so. Judges exposing a bias against a bill under consideration is not, they're not legally bound. They should be legally bound based on, not legally, but by their honor. They should step down from their seat on the court in order to campaign politically against the bill, not do it while they're still a judge. Judges are not expected to make law. They are not elected. They are appointed for the sole duty of interpreting the law in particular circumstances of the case before them, nothing more. McCormick has shown her true colors, and it is truly unfortunate. She is not fit to serve and should be impeached, says Larry Goldberg. Couldn't agree more, Larry. Fantastic work. All right, this is Randy Kirk, by the way. Hit the like, subscribe, notify. This is, of course, the end of the week, the beginning of the new week tomorrow. Regular programming tomorrow. Brian White should be on in the midday. And then Larry Goldberg, as just mentioned, Larry Goldberg should be joining me tomorrow night for Good News Monday. And let's hope that we see some stock appreciation on Monday. That would be Tesla Appreciation Day. That'd be great. Okay. And then if you haven't joined Patreon yet, come on now, folks, help support the channel. Randy could use the, a little more help in that regard. It seems as if potentially YouTube has damped me down just a little bit. I got yesterday one of my YouTube videos, which had no political content at all, got knocked down because of, they said, some kind of inappropriate content for their advertisers. I'm guaranteeing you, you listen to me all the time. Have you seen anything that should have been demonetized. Well, it wasn't my old channel, just the one video, but I think we're going to be up against that in the future. So if you wouldn't mind coming in on Patreon for a few months, or even at the $3 level, help me out here, because my numbers are definitely down right now compared to what I was expecting this time of year. All right, you could also buy a Cybertruck, or you could pay. You could just do one of these regular, like a $5 or a $10, just in YouTube. That's another way to help the channel. All right, this is from the Kobasi letter. Now check this out. Market sentiment among 206 global fund managers managing $640 billion in assets are the most bullish since November of 2021. Sentiment started improving in March when the Fed responded to the U.S. regional banking crisis with the Bank Team Funding Program. Since then, the S&P 500 has rallied 42%, and the NASDAQ is up 68%. At the same time, long Magnificent Seven has been the most crowded trade among managers for 15 months straight. However, allocation to technology stocks actually fell in June, down 20%, about 20%, the lowest level since October 2023, and is below the long-term average of 22%. So it fell down to, didn't fall by 20%. It fell down to about 20%. Down from 22, sorry, down from 22%, which would be about a 10% drop. Okay, so he says just about everyone is joining the bull trade. You know what I'm saying about that. I'm saying 5%, 10%. We're going to see a pullback. It's not going to be a long pullback, and we'll be back up by the end of the year. But there is a pullback coming. Not investment advice. I'm just telling you what I think. All right. Let's go on here. We have got what's coming up this week. Let's take a look at the things that are on the calendar. First of all, we have 3 Fed speakers on Monday, Christopher Waller, Austin Goolsbee, and Mary Daly. So a little bit Hawk, a little bit Dove on Monday. That's all we have on Monday. So those could certainly impact what's coming out in terms of stocks, how the stocks react to those. Then on Tuesday, you got Michelle Bowman with a speech in the early going. Then early also, S&P Case-Shiller Home Price Index. Well, that's going to be way up. Last month, it was up 7.4%. The folks, there was no survey, or they didn't give us an answer on what the survey was showing. I'm going to say probably up another 6. I mean, not another 6, but 6% year on year, something in that range. For consumer confidence, that comes in by showtime on Tuesday also. That last month was at 102, suggested it's going to drop to 100. So consumer confidence has been not so great pretty much everywhere you look. And then in the afternoon, we got Fed Governor Lisa Cook speaking. Wednesday, you have new home sales. Last month was at 634,000. Suggesting it'll be 650,000. Now, this is annualized, okay? Not for 1 month. 1 million homes a year is kind of what you expect total, plus or minus. If it gets way over 1 million, that's good. If it drops under 1 million, which it is right now, that's not so good. So new home sales here, thinking that it's going to go up to 650,000 from 634, I would be surprised. There seems to, well, you've heard me. How many times have I said it? I think we're going to see a little bit of a continued lag. Maybe by July and August, we'll start to see home sales pick up again, especially with interest rates down a bit now. Okay, on Thursday, we have initial jobless claims. Was 238 last month. They're thinking it might go back up into 240. I think that they're guessing, and they never really know. But then you knew that, right? Okay. Then we have the second revision. I think the second revision is the final revision. Maybe it's not, maybe there's one more, but of the first quarter GDP, it was originally, I think, 1.8. They dropped it to 1.3. It is suggested it will stay at 1.3. That would not shock me. That probably is about right. Durable goods, last month was up 6%, 0.6%. That would be like 7.2% on a running basis, suggesting it will return down that same 0.6%. Gosh. That would be kind of surprising, but maybe they're just looking at some kind of maybe some oddities in the numbers or something that it would be that much of a difference in 1 month. I don't know. All right, durable goods minus transportation. No information on that one. Last month it was up 0.4%. And then pending home sales, last month dropped 7.7%, suggesting it will be up 1% here. So once again, it seems as if people are suggesting, or that the economists that they poll are suggesting that this lagging, the home sales issue might be slightly turning as early as May, because these are May numbers that they're looking at. I'm thinking, I don't think it will be showing a turn in May, and I don't think, it may not even show a turn in June, but maybe by July or August. Okay, Friday, we've got Richmond President Tom Barkin speaking, and from Paris, actually. And then we've got, what do you think? It's PCE Day. So among the things we get on PCE are the personal income. Last month, that was up 0.3%. This time, they're suggesting it'll be up 0.4%, which would be too high for the Fed. They will not like that at all. That would definitely, if it comes in at 0.4%, you're probably kissing off any chance of a reduction in interest rates before the end of the year. November, December, I've been saying zero, of course, all along. I continue to say zero this year. Personal spending was up 0.2% last month, suggesting it will be up 0.3%. That would be another kiss of death. PCE index, the headline number last month was 0.3%, suggesting it will be zero this time. Now, remember that these PCE numbers are fairly derivable from the CPI and the PPI numbers earlier that we had. There's a few things that get added in, I guess, so you can't 100% derive it, or why bother, but you can derive a lot of it. And so this 0.0 is, we saw the CPI come in light. PCE year over year, suggesting that's going to drop from 2.7 to 2.6. That would be certainly, you would think that would be true if you got a zero for this current month. And then you got the core coming in. Last month it was 0.2. They're suggesting it'll come in at 0.1% higher. That would be positive. And then year over year dropping from 2.8 on core to 2.6. Interesting, there's also something called supercore. It would seem like my source should be putting that in there. I will look for supercore on Friday and see if I can get that for you when all this comes in. Then we get the Chicago Business Barometer, PMI, Purchasing Managers Index. Last month was at 35.4, which is a low number, suggesting it will pop up to around 40. That would be an improvement. Economically, that would be good for the economy. And then consumer sentiment, see a different consumer sentiment number from a different, I don't know if this is, I can never remember who's who, but anyway, last month it was at 65.6, and they're saying that the final number after revisions will come in at 65.9, a little bit better than last time. And then finally, yet another federal Fed speaker, Michelle Bowman, is speaking on Friday. Okay, where are the pre-markets as we go into Monday? Let's go ahead and take a look. I'm sorry, taking a little long here. I didn't set it up in advance, and for that, I ask you to forgive me. All right, the bonds unchanged right now on the 10-year, and the 2-year close to unchanged, 0.4 basis point up, 2-month virtually unchanged. All right, so not a lot of activity on the bonds. Let's see where the oil is going. So down 40 cents. So we've got a lot of we've had a lot of activity over the weekend in Israel. A lot of conversation about whether there might be some kind of a problem with Hezbollah. Well, a bigger problem with Hezbollah. This would suggest that people are thinking not so much. And Brent is down the same amount as Texas Intermediate, and Texas Intermediate now at $80.33. That's still high, but again, not an indication, no upward movement that might suggest something in the Middle East is in a real problem right now. Natural gas down almost a full percent to $2.68. Okay, gold basically unchanged at $2,331. Silver down 0.77, back under $30 again. Copper down 0.43%. At $4.42. You've got the dollar edging higher in the pre-market. You've got the Bitcoin down big, 1145. Now, what is going on there? Let me know in the comments below if you have any sense or understanding of why Bitcoin is now jumping. I think this is going to take it out of its range, its recent range, going on the downside again. You may remember that I think it was the All In Podcast boys were saying that about a month or 2 months after the halving, you should really begin to see Bitcoin going up. Again, I know nothing about it. I'm just reporting specific things I've heard. All right, in the equity section, you've got the Dow down 15 or 0.04%, S&P up 3, call that unchanged, or 0.05% up, NASDAQ up 30 or 0.15%. All right, so as I mentioned earlier, the number one thing you could do right now that if you can afford it, do not do this if you can't afford it. $3 a month, $5 a month, $10 a month. You know what you get. For $5 a month, you get one of my 2 books. These books are still quite, believe me, they are still on point, useful, chock full of information if you haven't read them yet. And if you go to the $10 level, you get both of them. Or if you go to the $10 level, you get the Cybertruck. You know what I'm going to do? For all next week, you get the Cybertruck bottle opener and both books if you come in at the $10 level. How does that sound? How would that be? Would that get you to move? Okay, let's see if we can get a few people signing up at the $10 level. I guess that's all I got for you right now. Glad to be back in the FSD driving world. We'll see how that works out over the next weeks. If I see anything really interesting, I'll let you know. Otherwise, I'll just, I probably won't say much. All right, see you in the morning. It's been great talking to you.